Discover the best techniques in finding the best POIs. So in this video, we'll explore the techniques and the strategies that you can use to find the best POIs in the market so you can trade like a pro. So stick around to the end of this video. If you are new to this channel, subscribe, like, because you'll be learning on how to find the best POIs in the market. Okay, let's take a look at the chart. Okay, we'll be starting with this example of a downtrend here. Okay, this will be our first example in this case, right? So here, here you can see that we have this structure break here. After this structure break, what do we have? On this leg, we have our inducement. We have this inducement right here. Now, price took out this inducement, right? Price took out this inducement. After taking out this inducement, we have this next break of structure here. We have this next break of structure. So within this range now, what you can see is this is our valid break of structure. This here is not a valid break of structure because there was no inducement taken out before this break of structure. So now this break of structure was valid because inducement was taken out here before this break of structure. Now looking back at this, we can see that this extreme POI, there's an extreme POI here. This POI, before this POI push prices to the downside, it took out liquidity. It swept this high. You can see here there was a sweep of this high around here. There was a sweep of this high here. So now in this case, now this POI is at the extreme, so this POI becomes high probability POI. So now what we're waiting for now to take a trade from this POI is just for price to create inducement. Then when price correctively pushes up back to this POI zone here, we can look now for a change of characters, maybe something like this, and we target this low down here. So in this case, this is our high probability point of interest here. This is our high probability point of interest here. This will be our this will act as our inducement in this case, and this will not be a valid break of structure because price did not take out any form of inducement before this break of structure. Now, coming back to this point here, right, we have another POI which is like this. We have another POI like this. We have another POI like this, whereby in this instance, price did not sweep out any inducement. Price did not take out any form of liquidity here. It did not sweep the previous high. Instead, this high failed to sweep the previous high, and this high mitigated this extreme POI here. So now this type of point of interest here is low probability point of interest. This is an example of a point of interest whereby totally avoid you should avoid this type of point of interest because it will just normally lead to losses and maybe a sweep of this high. Now, moving over to another model of point of interest, that this one is high probability point of interest, right? So this high probability point of interest is something like this. After price takes out the inducement, price comes to this high. Instead of price to react from this high, price just sweeps this high, and after sweeping this high, price doesn't close above the high. It just weaks through. here, it just weeks through just a week and close back inside. So this one will be high probability POI. So in this case, you don't necessarily need an inducement on a smaller time frame before you can sell on this POI. You can sell directly the next candle close below the candle that swept liquidity. You can, and the next candle forms pushes back to the zone and you can sell. So let's move to the chart so that I can better explain to you these concepts, right? Now, what you can see here after this break of structure is we have this point of interest here. What initially happened is, let me switch to a 1 hour time frame. Okay, now you can see that before this break of structure here, price took out this inducement here, right? Price took out this inducement here, and after this break of structure, there was our inducement level here. So now, what happened is after price push up, it created this lower high here, then retraced, then taking out this lower high, created our extreme point of interest here. And you can see that this sweep this previous high here. So this is an ideal point of interest. Also, we have an inducement, which you can also mark it here. So now when price came to mitigate this zone, we were anticipating for a sell, but since it was Friday and there was news, we had this slight push above. So this is an example on how you can identify a higher time frame POI. So let's switch to another trade on uh, Euro Great Britain Pound. I'll show you an example of a sweep entry model. Okay. Okay. As you can see here, right, we have this point of interest at this level. Okay, what you can see here is during this zone, right, we had no initial point of interest here. This one, this was not really a good point of interest. Now, what you can see is this candle swept this high, swept this high. Then when it swept this high, it's not close above this high, it closed within this high. So what we initially do here is we wait for the next candle to close. This next candle close below this candle, so confirming this sweep. And then what we wait for now is for price to pull up back to the body of this candle, then we can take our entry and we target the low down here. So guys, that will be all for the video today. I hope I made it very simple. Please, if you are new to this channel, support me and like this video, and also subscribe to the channel because I'll be bringing very good information like this for you in the future. Please stay tuned and God bless you all till the next video.